Hey guys, it's Kevin, State & Co. Truck Insurance. We're heading into 2025 and everybody's questioning what's going to happen with the trucking insurance rates next year. The past couple of years been brutal from trucking industry standpoint. There's been oversupply of truckers post-COVID boom, and then market tanked. We still have way too many truckers on the roads, and the rates are, I think, many cases flatbed, dry van, reefer. They're just below $2 a mile, and even every other industry experiencing inflation and the prices going up for everyday items, food, clothing, houses, cars. But the one segment that's not been affected, seems not been affected by that, is the truckers. They haven't seen the pay increase in the past couple of years, and when it comes to trucking insurance, it's not getting easier either. All trucking insurance companies have gone through state-approved increases in 2024. We're doing business in 20 different states, mainly East Coast, but as well, Midwest and out west in Texas and California. And we've seen pretty much every single trucking insurance carrier had either 5, 10, 15, 20% increase. And it's been the trend for the past decade. The average vehicle price in the United States is, I think, like over $40,000. So does average accident. The payout on claims is way, way higher. And that is, all coming down to the bottom line for the insurance companies, because at the end of the day, they're still into to make money, and to stay in business, they have to price their policies accordingly. I know many trucking operations shut down, especially the new entrants that started in this business in 2020 and 2021. Same thing happened with some of the trucking insurance companies. They're no longer in business. They tried to compete. There was a significant one was Mojave Insurance. They were basically stealing the market in 2020, 21. We were seeing some incredible, crazy rates for, new venture truckers, 12, $15,000 per truck, full coverage. And they were accepting drivers with less than 2 year CDL experience. And this company is no longer in business. And now we're seeing some of those clients that ran away and got insurance through Mojave, and now they're coming back and they're struggling because everybody else has gone through the rate increases. You can still get decent insurance rates these days, but you have to have a squeaky clean operation, especially when it comes to those DOT inspections. The past 24 months is the key, because every insurance company is looking at your FMCSA safety scores. And if you have a ton of out of service violations, that's going to be reflected in your insurance premiums upon renewal. And I've seen, 20, 40, 60% increases upon renewal for those that have multiple violations. And the comment where, a lot of people would say, well, these were owner operators, they were fools, they didn't know what they were doing, and I fired them, they no longer run for my company. That doesn't help, because if the owner operator was running under your authority, that's your responsibility. You're supposed to coach them and mandate, make sure they do their trucking inspections, make sure they're in compliance with all the DOT paperwork requirements, because when you get pulled over by the DOT inspector, if they're failing those, that's going to be reflected in your safety scores. So, and then, the 2 year CDL experience, that's an industry standard. There's only a handful of remaining insurance companies that will offer you, insurance without, drivers having a 2 year CDL experience. And in those cases, you're limited with Progressive, Berkshire Hathaway, maybe a few risk retention groups like OIDA or Motor Transport Mutual. So there's, maybe 3 or 4 that will insure if your drivers don't have a 2 year CDL experience, but it will be costly, because those insurance companies know that, they're pretty much the only players in the market that will take that risk. And the risks are significant. About 80% of trucking accidents are, caused, and they have involved drivers that have less than 2 year CDL experience. So the numbers drastically change for the drivers that have 2 years or more. And that's where you can start seeing some of those insurance savings. So clean duty inspections, 2 year CDL experience drivers. Drivers have to have clean MVRs, the last 36 months being looked at very closely. They might have, one or two small violations, but nothing, no major violations. And many insurance companies will just deny a driver if there's a DUI in the last 5 years or a cell phone violation in the last 5 years. Those are considered major violations, as well as the reckless driving. Claims loss history, very important. Even to the point where even small claims might have a big negative effect. Recently, we've seen a submission where, they had 6 claims in the past 24 months, and those were small claims. They were comprehensive collision claims, or it's a, windshield, fender bender, $700 here, $2,000 there, $3,000. So altogether, the claims for the past 2 years added up to, excuse me, maybe 10,000, less than $10,000. But because of the frequency and severity, just the frequency of the claims, many insurance companies deny the submission because from their point of view, well, there is like, 5, 6 claims in the last 2 years. It's just, so frequent, it's luckily nothing resulted in major payouts, but that's an indication that things might change down the road, and a big claim might just waiting to happen. One might ask, which insurance companies will insure me in 2025 and provide me with those great rates, given the fact that I meet all the criteria, clean safety scores, clean drivers, no claims, been in business for more than 3 years. And they're depending on the state where you are, there's a handful of trucking insurance companies that are still offering very competitive rates. Could be Great West Casualty, Northland Insurance, Canal Insurance, IAT, Berkeley, Crum, Carolina Casualty, AIG, Zurich, just to name a few. And all those insurance companies can get very competitive. We've seen rates as low as $6,000-$7,000 per truck per year, and again, those are well-established operations, clean drivers, and they're benefiting. They're getting the savings, and that's where it helps you with the bottom line with your business. And my advice for new ventures, and new ventures defined anybody who's been in the trucking industry less than 2 years with their own active authority. So don't confuse the fact that you might be working for somebody else as a company driver or been leased onto another carrier. Unfortunately, that type of history is not going to count when you are trying to get your own MC number and your authority active. So if you don't have that active authority for less than 2 years, you will be labeled as a new venture. And the only options at that point would be Progressive, Berkshire Hathaway, maybe Cover Whale. Those kind of like the top three that come into mind, and they will be pricey depending on the state where you are. We're seeing prices for the new ventures anywhere from 15,000 up to 25,000 per truck per year, and that's a complete package. I'm talking 1 million commercial auto liability, physical damage, which is comp and collision, and cargo coverage. And the state factor plays a big significance. So based on where you live, where your company is located, we're seeing price difference 40-50%. The rates are kind of still cheap in Carolinas, Tennessee, Virginia. It gets more expensive in Florida, Georgia, Texas, California, and especially in the some of those West Coast states. California is, heavily regulated. Many trucking insurance companies just, pulled out of the market altogether, which leaves not many players that can insure, new ventures and new trucking. Well, stay safe, keep making money, stay tuned, and we'll see you next time. Bye.